When it comes to dividend growth investing and building out a long-term portfolio full of different dividend stocks and ETFs, one of the most important metrics that I've learned over the years of my dividend investing journey is dividend growth rate. And the reason why I think dividend growth rate is one of the most important metrics for any long-term dividend investor is because when you're building out a long-term portfolio, having a stock or ETF increase the dividend payouts on a yearly basis, all that does is increase how much cash you're going to earn by holding the same exact investment long-term without having to actually buy another share of whatever stock or ETF is paying you in the first place. Now, in this video, we're going to go through 3 different dividend growth ETFs that have consistently paid more and more and more year after year to investors. And I'm going to share with you on why I think all 3 of these ETFs are the best in their class. Now, if you consider yourself a dividend growth investor, make sure to drop a like down below, stick around, and let's get right into the first ETF. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend growth ETF that's an absolute beast when it comes to dividend growth and when it just comes to growth in general, considering this ETF is basically trading at an all-time high as I'm filming this video. The ETF I'm talking about is ticker symbol DGRW, or the Wisdom Tree US Quality Dividend Growth Fund. Now, I've talked about this ETF endlessly on this channel, and I've even talked about the fact that it's one of my favorite dividend growth ETFs across the entire stock market. Now, this is because this ETF offers extreme growth as far as price goes, considering this ETF is trading about 3 times as much as it was just around a decade ago. Not to mention, this ETF has a bulletproof basket of holdings that's extremely diversified and also pays a dividend on a monthly basis. But just to back up here for a second, this ETF, like I said, has grown significantly over the past 10 or so years, up around 194%. Now, the only downfall, the one and only downfall of this ETF, if I was to have to choose one, is going to be the expense ratio at 0.28%, which is higher than that of the other 2 ETFs that we're going to be talking about. But once I break down the numbers later on, you are not going to be as concerned about that higher than average expense ratio, I promise you. Now, like I touched on, the holding breakdown as well as the top 10 holdings in DGRW are what I would like to think are some of the best top 10 holdings as far as a dividend growth ETF across the entire market. DGRW has a perfect mixture of technology stocks, which are going to grow the ETF long term in my opinion, but also some massive dividend growth kings like Johnson & Johnson, for example, that consistently raise their dividends year after year after year, which is again just one of the many reasons on why I consider this ETF one of the best in its class. Now, to look a little bit deeper into the dividend yield and dividend growth for DGRW, we're talking a 1.68% trailing 12-month yield, which again isn't the highest, but you also have to consider that DGRW is back to trading at all-time highs, so maybe a few months back this would have been a little bit closer to 2 or even above that. But like I touched on, DGRW also does pay a dividend monthly, which I love that, being that I'm a little bit more of a dividend income focused investor that likes to get as much cash flow as fast as possible, generally speaking. And also DGRW does have some pretty significant dividend growth long term, although it is a little bit all over the place because their cadence of dividend payouts is a little bit wonky, but DGRW has been paying more and more in dividends long term. The next dividend growth ETF that has consistently paid investors more and more and more year after year and is quickly becoming one of my favorite long-term buy and hold ETFs that I'm planning to build out a huge position in over the next few years is ticker symbol VIG, or the Vanguard Dividend Appreciation Index Fund, which is also, as I film this video, trading at all-time highs. Now, VIG has grown significantly, as you can see, not even including dividends, is up 252% in the max time frame. And to be more specific, VIG is trading at just about double of what it was trading at around 10 years ago. Now, VIG's expense ratio is super cheap, so this is a long-term buy and hold investor's dream at 0.06%. And VIG's holdings are very similar to that of DGRW. There's a lot of the same names in here. We have a large portion of Microsoft once again. You see Apple, JP Morgan, we have Johnson & Johnson, a lot of crossover here, and around 300 holdings once again, just like that of DGRW. So this ETF, although you probably don't have to worry about it, is diversified just in case some of these top 10 names do of course have a bad quarter or a bad year for that matter. Now again, as a relatively younger investor, being 31 years old currently for me, I've learned that I want to have a little bit more exposure to technology and other names that might be a little bit higher beta, although I definitely do not want the entire portfolio for that matter to be technology, but I do want some exposure to some more growth because again, I am relatively young and I'm going to be hopefully investing for a while here. Now, VIG has a 1.83% trailing 12-month dividend yield, and the dividend growth for VIG is significant. Hold on here. So much so to the point where VIG, even as of recent as last December, paid their largest dividend ever, 92 cents on a quarterly basis, which keep in mind the December before that was 87 cents, the December before that was 77 cents, and then before that was 66 cents. So if an investor back in 2020 bought a share, for example, of VIG, they were getting paid in December 66 cents, and that same investor, just by holding onto this ETF that just continues to go up over time, is now getting paid almost 30% more just for holding on to the asset. Now that should explain very clearly how ETFs like this are massive wealth generators long term. But even for some more perspective, around 10 years ago, a decade ago, which in investing terms, relatively speaking, is not that long, a 40-cent dividend was paid back in December. And now we're talking anywhere from 80 to 90 plus cents on a quarterly basis, of course. Now, again, this is so important and crucial, especially for investors out there that might be just getting started out that don't have all that much cash balance to work with. If you're watching this video and you have, say, $10 million or $5 million to invest with, well, then this isn't going to be as significant to you. But if you're an everyday investor that wants to squeeze out as much as possible, finding assets like VIG that offer significant dividend growth is going to be very, very important. Now, the last dividend growth ETF, that side note, is currently the position that I'm building out in my long-term portfolio pretty heavily as of right now, is the Schwab US Dividend Equity ETF, or SCHD. Now, SCHD, just like DGRW and VIG, has grown significantly in ETF price up until I would say around 2021, where the ETF prices basically traded sideways. Although, to be fair, during this time frame, SCHD not only paid investors every quarter, but also paid them more and more in dividends. But long-term SCHD is up around 197%, so not too shabby. SCHD also has a really cheap expense ratio at 0.06%, so it's going to be very close to free to hold on to this ETF. Now, this ETF's holdings are not my favorite. Comparing these holdings to VIG or DGRW and trying to say that these are better, I really couldn't take myself or anyone else seriously. But even that being said, I am still a fan of the majority of the top holdings in SCHD, although like I said, I also would love to have more exposure to technology, which I'm planning on doing here. Now, SCHD's top holdings are things like Broadcom, AbbVie, Merck, the Home Depot, Amgen, Chevron, Verizon, etc., etc. But now to get to the really good part when it comes to SCHD. The trailing 12-month dividend yield is 3.46%, so SCHD is going to pay you about double that compared to the trailing 12-month for DGRW or VIG. Not to mention, when it comes to dividend growth, which is again the metric we're sort of chasing, at least for this video specifically, SCHD has some massive dividend growth. You can see certain years they've raised their dividend around 10%, certain years a little bit less. But overall, SCHD has had a very impressive dividend growth long term. Considering back around 10 years ago, SCHD paid out around $0.25 per share per quarter, and then around 10 years later, about 3 times as much. So again, even though SCHD has not been perfect, at least as far as total return goes over the past few years, the ETF has consistently paid more and more in dividends long term. Now lastly, I thought it'd be pretty interesting to see how all 3 of these ETFs have performed on a longer time frame of 5 years, and if we were to use total return as the metrics, so this means that price return plus dividends included. So in the last 5 years, DGRW has returned 97.77%, VIG has returned 83.53%, and SCHD has returned 78.66%. All 3 of these ETFs have done extremely well and have also paid dividend investors like myself more and more year after year. But now, just out of curiosity, if you were to have to pick just one of these ETFs to buy and hold forever, SCHD, VIG, or DGRW, which one would you pick and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.